Thank you for joining us at xm.com. This is a Forex Preview video. We'll be looking at the Reserve Bank of New Zealand policy meeting coming up this week and the outlook for the Kiwi. I'm Cristina Marujos. With me today is our investment analyst, Cristina Partenido. Cristina, the RBNZ will announce its first policy decision of the year on Wednesday in a relatively difficult time for the country, which is under a state of emergency over the devastating Cyclone Gabriele. So what is the central bank expected to do this week?
Hi, Christina. Indeed, New Zealand is counting the damage from the deadly Cyclone Gabriele, which caused significant flooding, power cuts for thousands of people in the country's North Island, and severe damage which may cost more than $8 billion for the government to help the economy to recover again. So even though the central bank flagged the second triple rate hike during its previous policy meeting in November, which would push its rate peak up to 5.5%, policymakers will probably avoid such an aggressive rate increase, announcing instead a softer 50 basis point rate hike. It's worth it to note that the latest quarterly CPI release for the last quarter of 2022 showed that inflation was almost unchanged at 7.2% year on year compared to the 7.3% peak registered in the second quarter. Well, given the inflation slowdown in other major economies, New Zealand may also report the softer inflation readings in the first quarter of this year. But that will probably be well above its 1 to 3% range target. So more rate hikes will be needed in the year ahead to pressure inflation lower, especially as the disaster in crops will probably cause extra spikes, price spikes over the next months, and building materials will probably also increase. Demand for employment may increase as well, as the government will need extra workers to fix roads and infrastructure. So perhaps the labor market may also remain tight. The business PMI readings jumped back into the expansion area in January, which suggests that business activities are adding to economic growth. So overall, the economic picture is not discouraging yet, although the natural disaster may pressure the economy over the past few months. So it will be interesting to see if the central bank will retain its recession expectations during this meeting. The Treasury expects a recession in the second, third, and fourth quarter of this year, according to its latest economic and fiscal update in December. So overall comments on growth and inflation will be important to watch and could be directional as regards the path of monetary tightening in the coming months. Specifically, investors will pay attention to the central bank's rate projections, given that futures markets are currently pricing a slowdown to 25 basis point rate hikes for April and May, and then they also expect some rate cuts at the end of this year and at the start of 2024.
And now let's turn to the FX markets. The Kiwi is marking its fourth consecutive negative week. Could the central bank's policy announcement this week trigger some recovery?
That's right, Christina. The Kiwi has been on the back foot almost a month now against the US dollar, but it's currently approaching its 200-day moving average, which proved to be a strong support region in December and January. So technically, I would rule out a rebound around that line, which is slightly below the 0.62 level at the moment. However, the market doesn't seem to be in oversold territory, and fundamentally, an upside reversal could take place only if the central bank uses surprisingly a hawkish tone, signaling a terminal rate at 5.5% or higher. Well, I would rule out additional rate hikes, of course, in the coming months, given the high inflation. But overall, I think that the central bank will follow other major central banks, such as the Fed, and refrain from an aggressive monetary tightening, this time in the face of the natural disaster and the recession risk. Perhaps the debate will not be between a triple rate hike and a full percentage point rate hike as it was back in November. So it may sound a bit, relatively a bit more dovish this time, but it's also important to know that investors are pricing rate cuts at the end of this year, as I said before, and at the start of 2024. If the central bank manages to eliminate those expectations while signaling fewer rate hikes, that could still help the Kiwi to pivot higher. Of course, investors will get more updates when the central bank's press conference starts an hour after the rate policy announcement.
Cristina, thanks so much. This was a Forex Preview on the Reserve Bank of New Zealand policy meeting and the Kiwi here at xm.com.